Hello everyone and welcome to ICM's midday session. So today we had the German trade balance which came out earlier today for the month of October, showing a surplus of 18.2 billion, which was a good reading, showing that the German economy was performing well in October. As of the rest of the day, we have the jolts coming out as soon as US market opens, and then we have the Bank of Canada monetary policy meeting, where it's widely expected that the bank would keep policy unchanged with interest rates staying at 0.25%. And after that, we have the crude oil inventories, the weekly oil inventories. So moving to the platform, I'm still using yesterday's template. You can see the euro dollar is still trading in the same range that we drew yesterday. We drew these trend lines combining the bottoms and tops, and the market exactly fell towards the trend line and then bounced back towards the upper trend line. This is just confirming that we're just trading inside a smaller and tighter range as investors await the European Central Bank decision tomorrow, European Central Bank monetary policy meeting. So this is just for the euro. We're just consolidating inside this tight zone, awaiting fresh driver that could drive the market into a directional trade. Moving to the British pound against the US dollar, it's still all the bigness related to the Brexit is still weighing on the market. You can just draw a trend line here for the recent two bottoms. This is just to cope with any drop. Also, if you're just looking for some targets at the top, you can just draw a parallel line in order to set a possible target at the upside, which is just coinciding with the previous top of 135. So we can be trading inside this channel for a while until things are clear again. You can also use the Fibonacci retracement to set some levels which can coincide with current levels. So you can see the 88.6 is just the 35.2. It's just coinciding with the top of the channel and the previous top. So watch out for the 135 as a key level, while any reversal or move back below 134.05, it's just bearish again and could mean that we will be testing another time 133.50 and even lower. So these are the key levels if you are trading the British pound against the United States dollar. Moving to the dollar against the Japanese yen, we're still trading inside the range. So so this is the range that we're currently trading at. Yesterday we had a trend line here, but you can just combine the previous bottoms, and here we're currently trading at this trend line with almost similar support. So on the bigger picture, we're still consolidating inside this 100 pips range. The dollar against the Swiss franc. The Swiss franc was among the strongest, so we fell to another low, but it was almost similar to the previous range. So we set this one yesterday, 88.70, 88.75. So we're still in the same range. We're just losing momentum despite this move lower, but the momentum is just a bit shy. We can see how the market is rebounding at the first opportunity. So this could be the coming move. You can just draw the previous stops for a possible break above. So you can just expect a bigger correction, which could maybe first test the 100-hour exponential moving average and then go towards the 200-hour exponential moving average. So which is currently near almost 89.50. So this could coincide with this top. So this is what I'm just meaning. So this top, the moving average, maybe we could be testing it again. And then on an extreme cases, rising towards 89.80 if we're going to witness a reversal from here. If we're just looking for certain continuations, you can just draw a trend line combining the previous bottoms. You can see 1, 2, 3 bottoms. So maybe we could be retesting it again. It's near almost 88.60. The Australian dollar against the United States dollar managed to break above the previous high, but we're still on the bigger picture. We're still trading inside this channel. So you can just continue to trade the boundaries of this channel. Currently the top of the channel is almost coinciding with it's almost close to the previous top of 75, which is a key resistance. So this is the key range that we're trading in, 74.50, 75. A break below 74.50 could lead to further bearishness and a drop towards 74, 74.10, while continuation here could just break above 75 and continue the upside rally. The New Zealand dollar against the United States dollar, following this pullback, we had rally to the upside. We're almost trading near the previous top ahead of the 71 level. You can just set this 100 range to trade, and the break above 71 could just trigger another rally higher towards 71.50 resistance area, while the drop back below the previous resistance of 70.60 could just be bearish again. Maybe we could be poised to retest 70 level. The dollar against the Canadian dollar, we're trading inside the consolidation zone near its lowest levels in a couple of years. So this is just the zone that we're currently trading at. It's almost 60-70 pips range that we're trading. We're just waiting the Bank of Canada. So any disappointments from Bank of Canada could just lead to a bigger correction to this rally, maybe retest the 200. While on a hawkish tone, this could just fall towards new lows, tackling almost 26.50. So this is for the dollar against Canadian dollar. Gold prices were still inside this channel. Also, this we drew it yesterday. We drew also the 1855. We were talking about divergence between these two tops and the RSI. Now we have triple top divergence, 1, 2, 3. We have a triple divergence, but the market is just losing momentum, and we're just trading almost sideways between 1871 and 1855. However, this remains to be key levels. We can just denote 1875 ahead of 1884. So this is just 1884, since you can see here how many times it was a key level previously, and we got rejected several times from this level. So these are the key levels if you are trading gold. Silver managed to retreat from the trend line that we were drawing for a while. So it's 1, 2, 3, exactly 4, and then the market moved lower. We can just set the previous support as key point 2350. As long as we're above it, we could just be like ready to break above it another time, to break high another time. But still, this trend line is still valid. So we need to clear above 2470, 25 to just have another race higher. So this is for silver. The WTI on the bigger picture, we're still trading inside the same range. So we're just trading sideways, up, down. You can still see inside the same range. 46.75 from the top, and the 200-hour exponential moving average from the bottom. So you can see how this tight range is narrowing. So previously it was almost a $4 range, almost $2 at a $2 to $3 range, and now it's just less. You can just pinpoint it's almost $2.5. So this is just $1.5. So this is just meaning that we're trading in a tighter range, and this could be could be a hint for a breakout to come soon. But still, this is the range on the bigger picture: 46.75 and 43.95. Dow following yesterday's correction. So yesterday we were talking about this trend line 1, 2, and 3. So if you just draw this trend line, you draw the parallel line for this trend line, which was the channel, and just to drop it, and you can see how the market dropped towards the bottom of the channel, which was coinciding with the 200-hour exponential moving average. And on some positive headlines, it rallied higher, supported by also the talks of further fiscal stimulus. So this is just supportive. And it rallied exactly towards the trend line, combining the previous tops 1, 2, 3, and 4. So this is where we're currently standing on the Dow Jones, and continuing to add this trend line, since we're still trading inside this range. Also to just prove how classical technical was performing, also 1, 2, 3. So we had the confluence, trend line, bottom of the channel, 200-hour exponential moving average, a reversal point, and then the market moved higher. So for the coming levels, we can just expect the market's going to continue higher on some optimism. We could just expect another rally towards 30,500, while a drop here you could just draw for the Fibonacci and draw the previous tops. So almost 50%, 30,090 is just a key level. So maybe on a bigger, on a slightly significant correction, we could be falling towards 30,090 ahead, continuing higher. But this will definitely be the headlines. Any headlines regarding stimulus will be a key mover for US stocks in general. So this is all for today's session. I'd like to remind you, we have the Bank of Canada monetary policy meeting at 30 minutes after the US Open. So this is just important. You have to watch out for if you are trading any of the Canadian dollar pairs. So this is all for today's session. I would just like to remind you also that all the information, news, analysis, and opinions mentioned in this live session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all. Thank you all, and have a great trading.